Good morning, everyone, and welcome to Nadex Morning Analysis. It is March 30th. It is a Tuesday. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple, Brian Caprice. Before Brian and I get into looking at some hot spots in the markets today that you might want to be looking at for potential opportunities, we do need to share this disclaimer that trading involves risk and may not be appropriate, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, with that, the story of the day, what we're seeing, number one, the 10-year yield on government bonds popped a little bit. So the yield is going up, the price is going down, but the yield went up about 0.05%. That's a bit of a move when you're talking about treasury yields. With that, any assets that really look at inflation or that don't have any type of, that aren't performing assets, they get hit. So the NASDAQ stocks generally don't pay a dividend. They're technology stocks. They're growth stocks, and they usually take the money that they earn and put it back into their operations to continue to grow. With no dividend yield, investors start looking for stocks that at least have some type of yield on them, more like the blue chips, like the Dow stocks. The Dow is down just a little bit, while the NASDAQ is down about 0.75% right now. So NASDAQ stocks getting hit with those yields popping a little bit. We're also seeing gold and even silver, for that matter, assets that if you stored them, you're not earning anything on your money. So, rising interest rates also an indication that there's some inflation coming in. I mean, this is the market saying that. This is not the Fed making a move. This is just the marketplace pricing these assets, the interest rates. So, we're seeing gold get hit. We're seeing the NASDAQ get hit. So let's just go ahead and jump into those. And it could also be, I know we've got the president speaking tonight on the recovery plan. So people could be anticipating things that he might be saying. So there's a lot of things happening that could be moving the markets today. Let's jump into it. So Brian, you want to, I don't know if you want to cover any of those little stories first before we look at, I think we're going to do gold first.
Yeah, I think gold chart's the first one we look at. Right now, taking kind of a broad view of things, basically it's just it's dollar strength. Nothing else is really necessarily moving. The pound yen is at 3 in 24 hours. The euro pound is only at 15. All movement besides that is based off the dollar. You're seeing euro dollar down, pound dollar down, dollar yen, dollar Swiss, dollar CAD all up, Aussie dollar down. And again, a lot of this is probably having to do with the yields. As we heard Powell and Yellen speak, we haven't necessarily seen inflation yet. It's just the kind of the idea that it's there. The forecast of it is what people have been worrying about, but the market, again, is not with the Fed. The market is the general kind of consensus. And you saw it. It's interesting to see that it hits a 14-month high right here, but we haven't seen any really kind of official inflation. Everybody expects it's coming. And again, we talk about Joe Biden revealing details of his infrastructure plan right here and the recovery package of, $3 trillion. And again, all that spending you expected to come in, you expect, the dollar to kind of get stronger with things like that because all those things are inflationary factors. But we haven't seen inflation. It's not here yet. And again, this is the result of gold. This is a 30-minute chart. You can see the yellow circle right here in the middle is where we were yesterday. We talked about price potentially coming down and maybe taking a bounce, and it did. It came down and hit 1705, like we talked about. It came up, it stabilized right around noon, right? And then kind of here, I'll make it a little bigger. Came back up again, and then late last night it touched it, and it just continued to fall away. So, officially right now, gold across the board, whether it's 1 week, 1 month, 3 months, 6 months, a year, year to date, or 1 year. Remember, gold's supposed to be at 3,000 according to all the experts out there, and it's at minus 0.95% in the last year with COVID and everything else out there. So it's continuing to drop. I would say At this point, we do have one level a little bit lower than where we are. We have a level back here that we've had this one marked off for a while at 1674. It is still kind of in the middle range, but again, after this much movement this quickly, I would say that it is due for some type of a retracement. It's currently down 1.8% since yesterday. So that's quite a move, and we do have a level coming up. Bringing it back up, I mean, this is a level that I would be slightly cautious with. We did get front run on it one time. I think if we put it on the 4-hour, it'd be a little easier to see here. Yeah. Here's the original zone. And again, this is a much larger time frame chart. You guys know that I really like 4-hour levels, but the one thing about this level, I like the formation of it a lot, but having it come down and literally touch the very, very end of it also provides me a little bit of worry. I would say the next time we have a clean level is down at 1650. But again, the 1675 to 1670, if we do come into this level and we start basing, again, it could provide an opportunity for us to kind of retrace. And again, when you're looking for retracements, it can be a much smaller, less strong level. But again, we are in the lower part of the curve. We're getting back into the red area. So, the two, potential, things are, is we come down into this level, base sideways, whoops, go there and then click it again. Click. If we have some type of basing, any type of hopping around in there, then we can look for that kind of Harry Potter pattern to the top side. If not, I would say that 1650 is a much more likely reversal area, as well as a psychological number. But at this point, being below 1700, 1675 will be the first kind of potential reversal level that we could have here. And again, when could that happen? It could happen with a Biden speech. It could happen with the open. There is consumer confidence at 10 o'clock today, but besides that, nothing big. But with where we are, if we go down and sit on that level, tomorrow we do have ADP non-farm employment change. So, and again, that's expected to be a pretty big number, right? 552,000, jobs. If it comes
by the way,
much higher, then again, that could be the catalyst for this to really start bouncing around tomorrow.
Do you happen to have daily FX up right there?
Yeah, I do.
And you can look at the gold. Look on gold and look how 86%.
Yeah,
that's.
We talked about both this and silver. This and silver are both getting crushed again, and we talked yesterday that this is unfortunately too high. Right? Silver was at 92%, and silver's down more than gold is this morning. So it's one of those things everybody asks out there. It's like, well, why do so many people lose money? It's because of these type of things where if everybody's going in one direction, that's absolutely where you should be looking to go to the opposite, and that's.
It's just because what happens is they'll eventually get forced out of it, right? Mm-hmm. So you get so many people that are long, so many people that have sentiment, and when the market is pricing it against them, at some point, they'll have to puke out their positions. So and then you'll end up with a lot of selling pressure.
Silver's still 92% long. And you can see that silver's, gold is down 1.74. Silver is down, and you guys can see here was that little trap that we talked about. And again, missed the first one. It hit the trap on the second one, went higher to take all those people out that trade support and resistance, and then crashed down right through and it's almost where the level we talked about before. It's down 2.14. And again, 92% of people are long that one. So
gold and silver definitely taking a beating. Now, I did want to show you how you could potentially play. Let's just bring up gold for now. I think it'll be easier. I'm looking at call spreads. Remember, call spreads, you're not knocked out. And if you click on any of the call spreads, you'll see the shaded area is the level of the call spread. So I'm just actually looking at, here's a call spread that's with the floor that's near this one initial level where, it's been an emotional move down. We might see some type of basing and a pullback. So how could you potentially play that in a limited risk, limited reward way? If it gets down to this 1675-ish level, these call spreads become kind of interesting because you have upside on a bounce. You're protected to the downside. If it touches the floor, you're not knocked out. You still have opportunity for it to come back. And of course, you do not have to wait. This expires in 4.5 hours. That's when gold's going to close today. But it gives you an opportunity to sell it if you catch it on a bounce. And if it goes lower, there's there's one. This is that 1650 level where Brian's really looking if there's a massive washout. Could that happen? It can happen. So call spreads one interesting way to play gold. The other would be with knockouts. With binary options. But you know what? I want to keep us moving along because Brian's going to be doing a full-blown analysis later this morning. So I don't want to steal all of his thunder. I want people to want to come back for more when he goes for the webinar today. All right, so that's a little bit on gold. Let's talk about NASDAQ. I mean, these indexes, and again, I'll have to check quickly on the live prices. Yeah, the NASDAQ right now is down about 0.7%, looking for a pretty weak open, while the Dow is only down 0.1%. Now, I mean, everything is a little bit red, but the Dow stocks, again, people aren't racing to dump and puke those. They do perform. They've got dividends attached to them. NASDAQ definitely struggles when interest rates start going higher. So let's take a look at some interesting levels in the NASDAQ.
Yeah. So again, one of my personal best practices is 15-minute charts on NQ, basically NQ, ES, and YM. Again, here's where we were yesterday. We saw this pop up into that level. We talked about the 12,962, and it literally spiked up for the open and then came crashing all the way back down to the opposite level that we talked about, the previous level of basing. It was a double one, so I would be using this more, as I mentioned yesterday, more of as a target. But again, it was a 45-minute trade, and then we went right back up to that same level again, ended up dropping back down again. And then in the after hours, I did a session for my folks. That's why I had this line here, and you can see all it did was pull away from the same level yet again. I would say, again, we talked about 12,962 and 12,704 as kind of our two levels we were looking for bounces off of. We've had multiple opportunities up at the top to get short. With it grinding down and with what we're seeing today, again, for those of you that aren't aware, I mean, the VIX is definitely something to keep an eye on. As the VIX gets higher, it tends to be more negative for the market. It was up 7% yesterday. Right now, I saw it a second ago. It just pulled back a little bit. It's almost at 3% right now. It says 2.89, and I'm delayed a little bit. It was 2.99 a second ago. So with the VIX continuing to rise higher, that is not necessarily the best. Again, infrastructure, all those things are kind of more Dow things than NQ. I would say at this point, I mean, if we extend this level across, again, could we use this for a bounce in, at 10 o'clock or at 9:30? Yeah, potentially, maybe. But at this point, I'm almost more curious if it'd be better to take this one as it breaks through the bottom side. Take it for a short when it breaks through the 12,807, and then look for 12,704 as our target. Basically calling, again, getting the appropriate entry, a pullback, and then a failure to go higher, above that level. But something along these lines for today. I mean, like I said, it's pretty much right across the board. Looking so far in pre-market, everything that we see with the dollar up, indices down, gold, oil, silver, all to the downside. Tesla down 1.2%. I mean, all the things out there right now are currently saying, hey, listen, this is probably going to be a red day. What could be the cherry on top is if this consumer confidence number, which again is supposed to be much higher, if this consumer confidence number at 10 o'clock comes in lower at, say, even a 95 or 94, while it's still better than it was previously, it's lower than expected, showing that the consumer is not necessarily happy. Unhappy consumer would definitely lead this to the downside as well. So,
all right. So yeah, let me. So I just wanted to take a look at the NASDAQ. Again, Brian, at 12 p.m. Eastern, 11 a.m. Central, I just dropped into the chat a link to register for Brian's webinar where he's going to do a full-blown analysis of all the markets. He'll go through the currencies, he'll go through the metals, he'll go through the energies, he'll go through the indices. So if you definitely get an opportunity. And when we're talking about, we're looking for opportunity when we do these sessions in the morning, we're actually looking for places where there's going to be volatility and some movement, because that's the point, is what's hot today? Where are you going to see some action? And that's what we're trying to help you with. And just understand that, I mean, any of the markets can, blow up at any time or even do nothing. I mean, you never quite know. Now, in the NASDAQ,
it's impossible to plan for everything, and that's right. That's why risk should be your number one kind of focus in any type of trading, and that's where people get into trouble. They take these big risks, assuming that and focusing on the profit side of it. You should always be focused on risk first, and that's why I think if this, that is the best way to trade, because you are focused on risk. You have an acceptable level of risk before the trade even happens. It's not emotional. It's not responsive. It's it's kind of cold and calculating. And again, that's why I think Nadex is a great product for it, because again, your risk going into it, and it can never get any worse than the cost end of the transaction plus the fee. So.
Yeah, I mean that's the whole point. Let's eliminate the surprises, because generally speaking, in trading, surprises aren't good, right? So, and I was looking at call spreads earlier on the gold. We could have also looked at knockouts with some hard knockout levels. Some people really happen to like those. Here in the binary options, I wanted to show you, just because this is where opportunity presents itself. We do have this level up above, this 965, which we hit several times yesterday, even popped through it a little bit, but it did push off of it to the downside. We know we've got this, call it 12,800-ish level for some potential support. But again, we don't know. I mean, things aren't looking pretty good. Brian's thinking, you got to be careful to the downside, which is, I mean, there's this, it's all the way down here at 12,700. So one way to play this, as it's an if this, then that. If you see it pushing down, because we don't know what it's going to do from here. You can't, no one's got a crystal ball. We're not making any predictions. We're not telling you what to do. We're not giving you trade recommendations, just trying to help you as you look at the markets. If you see it get down into this level and it bases, and then it starts breaking through it, it looks like there wouldn't be buyers down a ways, and you'd be able to take some short positions in some of these binary options. Again, limited risk, limited reward. If it were to get down into this level, you would actually see the prices more along the lines of what you're seeing up here, where they'd be in the 40s and 50s, and you could potentially sell them, and as it pushed lower, buy them back at a lower price, right? As if it pushes through and continues going lower. So binary options, an interesting way to play the NASDAQ. Again, because it can be volatile, it's got that defined risk, defined reward built into everything, so that you know what your potential risk is up front. All right. I know we went a little long today. Brian, do you want to talk a little bit at all? We've got the president talking tonight at 8 p.m. And then I know for those who like to look at opportunities during the European session, there are going to be some opportunities. The UK is announcing their GDP at 2 a.m. Eastern, so that could potentially move the pound. And then Eurozone core inflation number, 5 a.m. tomorrow morning. I don't know if you want to just do something real quickly on that, because I know we want to call today and give everyone a chance to, one, get ready for the open, and two, we don't want to give away everything. We want them coming back so they can really get the deeper, full analysis to you later.
Yeah, I mean, I'll break them down individually, but I mean, for me, final GDP is not necessarily the biggest one out there. It is a quarterly reading, though, so that's always good. But final, typically, there's not a surprise. I think there's more to be kind of looked at tomorrow morning. But again, because it's an ADP employment change, that's going to be the news release of the morning tomorrow. So, and again, that's where we're going to have to look at some 4 hours levels, and that's going to be something we'll do at 12. We don't have enough time to do it this morning, as well as Cordell tomorrow. So there's a lot tomorrow morning, but it's all U.S. based, and I think that's what's going to dominate at least the European pairs more than what the other news is. Any other given day, it would, but not tomorrow.
Excellent. All right. Well, with that, you got any questions for Nadex, please email us, customerservice@nadex.com. If you have any challenges, we can only help you if you reach out. Brian is also very accessible. If you'd like to reach out to Brian and ask him some questions, you can email him at support@keeptradingsimple.com. Support@keeptradingsimple.com. I know he really enjoys chatting with you, yeah, I would say if you got any questions, please feel free to reach out to him. With that, please be, if you can, join Brian today, noon Eastern, 11 a.m. Central. He'll do a full-blown analysis. Otherwise, we'll catch you tomorrow morning. With that, I want to wish everyone good luck in the markets. All right, everyone, thanks.